Welcome back to the Crypto Uni. My name is Adam, and today we're going to continue our series and just kind of like talking about crypto skeptics. This time it's actually a recent interview, so let me just see. It's an interview from 9 months ago. Okay, so we were still not quite where we are today. We did we have the ETFs? We didn't have the ETFs then. So this is just before. This is things were starting to pick up. The bear market was starting to really turn into the bull market for the first time since the crash of 2021, 2022, and now we have our author here, pre ETFs, which I don't think he would care given his background here. This is David Gerard. He is a notable cryptocurrency skeptic, so I should watch more of his stuff as well, and it'd be interesting. He also wrote 2 books: Attack on the 50-Foot Blockchain, 2017, and it would be interesting to see how well that book aged. It sounds like he still feels the same way about crypto and Bitcoin, which is totally fine. And Libra Shrugged. This is the Facebook project that attempted to integrate cryptocurrency into Facebook, and it was abandoned. The team, however, went on to use Sui. Oh, look, he wrote about interviewed the Canadian right Quadrig CX. I remember that one as well. Okay, cool. Oh, he's got an interview on 60 Minutes Australia. Okay, cool. So let's go ahead and watch this interview first, and then we will
Two
take it from
books,
there.
Attack of the 50-Foot Blockchain, which really outlines blockchain technology and crypto. He's also author of Libra Shrugged, which outlines the attempt at Facebook to control money. He's a crypto journalist. He has a website where he regularly publishes articles.
I don't do a recap. I just did a recap. Okay, let's jump in then. Here we go.
Spot to start with crypto, Bitcoin, just this huge topic that is cryptocurrency. And I almost don't like calling it cryptocurrency because it's maybe not the best term to term it with being a currency, but what exactly is blockchain technology? Are there use cases for
Stop it on that point. Cryptocurrencies. I think that it's also a misnomer to call them currencies in a way, but I would also I'd also ask like what are we defending? Currencies as unit of value. I mean, shells and rubies and rare earth metals and different types of coins. Like people throughout history have moved value back and forth into these abstract units for a long time, and they have looked very, very different from each other. So, does it look like a fiat currency from a nation state? No. But is it impossible for us to define it as being a currency? Just a bit up in the air for me. But cool, let's go forward.
blockchain? Is crypto different from Bitcoin? How do we understand blockchain technology as a
Right. If
whole?
you want to understand it, because what you're asking sounds like a technical question, and I could
It's
give you an
not.
answer about this is how the chain of blocks works and so on. But if you want to understand it, you have to understand the purpose of Bitcoin and cryptocurrency and all the various blockchainy things is to create financial instruments that are outside regulation. That is literally the purpose. That is.
So this is. I mean, I don't think. I think that is true to some extent. Um, and I'm not sure if it's a bad thing. So, I really do think of the Americans' freedom of speech type, First Amendment type stuff in their constitution, and there's a lot of freedom of speech absolutists. I won't say that I'm a crypto, freedom of digital ownership and exchange absolutist, but I definitely see the virtues of that point. So, um, he's making it out to be a bad thing that you would be able to obfuscate your transactions and transact as you please without regulation from a nation state um, or a corporation. So, I mean, the question is that truly a bad thing? And in some ways it is, but in some ways it is patently not. Just as freedom of speech can be used to cause harm, can be used to spread misinformation, can be used to promote terrorism and radicalization, but also it gets us out of a lot of other difficulties as well. So, interesting point he's making.
Why Satoshi Nakamoto, whoever he was, invented Bitcoin. That's what the early Bitcoiners wanted. They wanted money that could not be regulated and that in particular could not be taxed. That is
It could not be regulated. I think the idea was to remove the middleman from the equation and to not have your currency that that you're settling in cash be able to be inflated by monetary policy, and specifically the idea. So like, I'm not necessarily disagreeing with him. It's just like, is this evil? Removing the ownership, the complete domination of currency, which you are subjected to every day, from the state and from political organizations that are lobbied by corporations and are basically paid and bought for by corporations, removing it from the state and that political corrupted apparatus and taking control of it yourself. There are further ramifications, including like less regulation, and maybe tax avoidance, of course. But again, is this evil? I'm just asking the viewer now. He's making it sound like it's very evil, and there's some bad things to it, but also not purely evil.
Is the actual purpose of all of this. There's a lot of hand waving, a lot of obfuscation, a lot of people claiming, well, you just don't understand the technology. I am a
Yeah, no, I think
technology.
I think he's right where he's going. He understands the technology. I hope I understand it to some sufficient degree. I think I do. And yeah, like it's not a question about the technology. It's a question about what are we aiming for with this technology. It's kind of like a freedom of speech issue is not about the technology. It's not really about the platform that you're on, whether it's Twitter or Twitch or something like that. It really is about the ideals of freedom of speech, just as in crypto, it's freedom of digital ownership and right to transact.
It's not that hard. It's pretty simple technology,
Yeah.
But the tech doesn't matter. It's what people want it for. And what they want it for is to make financial instruments that evade the sight of regulators. That is what blockchain technology means. That's what Bitcoin and
Yeah, and again, like I'll give it to him that, he's allowed to discuss it as avoiding regulators. I don't think it has to be. I think this is the main point. I think that the internet you can also have the internet, and I constantly think of the internet because it's like the internet is the sea of democratization of content creation and voices and kind of like that freedom of speech. And crypto is the democratization of creation of currencies or value exchange units and creating communities based off of that and being able to do that freely. So there's like the democratization of these zones or this layer of digital life. And when it comes to information layer, yeah, people were looking for a way to not be blocked by newspapers, to not have to go to the newspaper and get it printed, to not have to be subjected to a nation state where you can now use a VPN and you can post something. If you're behind the firewall of China, you can still post and view a bunch of information from outside of there. And so people do bad things with the internet in that regard, and they post misinformation and they spew violence and racial slurs at each other. And they spread horrible ideologies. But the question is not whether or not that's happening with the technology. The question is the good that we're getting out of it and the pitfalls that we're avoiding. Can we merge those together into some sort of optimal combination and hybrid? And he's kind of saying that you can't have cryptocurrencies with any sort of regulation. I think that's wrong. So I think he's building up a straw man here that's it's too simplistic. I think he probably is aware of this, but I don't think that he cares.
Crypto are actually for.
Right.
Okay, that's what their actual purpose is.
Yeah.
And I guess looking at a lot of the frauds that have been uncovered in the last year or two, it does become apparent that that's most of what is going on.
Absolutely.
Do you think a lot of the popularity of crypto has arisen because of people's lack of trust or increasing lack of trust in just the financial?
And let me just head this off here. Crypto would not be popular if there wasn't money to be made on it, right? If it didn't work, if people didn't see higher and higher returns, if Bitcoin, which is basically half the market cap of the entire thing, was either a failure or it started going down drastically, and people didn't have hope and didn't have this feeling of moving forward with it, it would probably die. People wouldn't be interested in it. So yes, there are a bunch of scams and stuff, but fundamentally, there's more and more millions, hundreds of billions of dollars going on to these technologies, and we have to ask ourselves why that is. And so while there's a whole bunch of mania and frenzies and scams and a whole bunch of stuff happening directly under the surface to it, it's still within this container of kind of hope and futuristic ideology.
Hegemony as it exists. Do you think that's why, in part, crypto has gained such a following?
Maybe a vague feel of that, but nothing so deeply thought out. The number one reason to get into crypto is because you want to make dollars.
Yep.
Functionally, crypto as we know it is a dollar derivative. People get into it because they want to make dollars.
I mean, everything's a dollar
right.
to some extent, I would imagine.
An ideological core. Now, Bitcoin was founded by very sincere extreme libertarians, right? People who think regulation is the most evil thing in the world. I mean, fine. There's something you say for that view.
I don't. Okay, he's saying there's something to be said that. I mean, you look at what the fuck happened in 2008, financial crisis, the collapse and the bailout of the banks, and you look at the regulation that was in place, or the descaling of it and the defanging of it, which happened over basically 2 administrations and over a decade. And this is not the only place in the world where that's happened. The U.S. context was one of the biggest modern ones, but you can look around the world and find different examples from different nation states. So he's accusing the opposite side of doing hand waving. He's really hand waving over this thing. Oh, it's not a big deal. It's the biggest fucking deal. I think it explains the fact that why the millennial generation is doing worse than their parents at the same time, with more education and more kind of like financial opportunity. It's because they're not able to pay that the price of assets has gone up so much. It's so much outpaced the medium income. And even though you're spending more time getting educated, and there's more higher paying jobs out there, and there's more kind of opportunity to be an entrepreneur, at base, the average person is still really struggling.
Viewpoint, nobody wants the government in their face, but when you get into real finance, you realize a bit of regulation's probably not a worst idea.
It is good, and I think you can have it with
crypto. But they sincerely think it's terrible. So there was that core of sincere people. But basically, the moment you could change bitcoins for actual dollars with any reliability, which would be when the Mt. Gox exchange really got going late 2010, early 2011, you could send it bitcoins and send money via PayPal. And so that was the only first time that Bitcoin had a price meaningfully. See, it started with sincere libertarians, but rapidly scammers flocked in. Flocked in. They and not fresh scammers. There was a lot of old scammers, like mail fraud people and so on, and old Ponzi schemers, high yield investment programs guys, and they what they saw was an audience of fresh, naive suckers that they could just skin, and they did repeatedly. And rapidly. I mean, I've actually done some.
Again, the space without regulation. I mean, I have to go back to the internet, not because crypto is the internet or something. It's just because the internet has been a fairly new transformative technology, which you could argue crypto is not. That's fine. We're still in the early days, though. The early internet, you would also, it doesn't look anything like it looks like now. But the internet is also a place where you've created this platform where so many scammers can now get on board, and they can be more efficiently scam, and they don't need to send out snail mail anymore and get a response back in the mail where you shove $10 in. They can contact you from halfway around the world. They've gotten more complex. There's call centers in places all over the world. India's the most famous one, and it's like, it's just that's a problem, and we need regulation. We need, just as on the internet, we need safeguards, and we need the ISPs to be involved. We need the government to be involved, and we need to uphold certain standards, both for accessibility as well as for safety on the internet. We'll need that in crypto as well. It's just not surprising, basically. When you think of the internet and the development of it, and all the freedom people have to do a whole bunch of scummy things on there, and the dark web, which is like delisted from all the search engines that use the Tor browser to kind of access it. When you think of what the internet is and how much it contains a whole bunch of things, including horrible things, drug pornography, child pornography, drugs. Like, there's despicable things on the internet, but that doesn't mean that it's useless. And in fact, because we understand this and we put in an effort to regulate it, it's actually overall a good space, I would argue.
Diving into like the old stuff on the Bitcoin talk boards, which was where the action was back in the early days. And it's like a lot of.
And also, it's possible. I just put the internet thing again. And I just need to, I guess I need to explain this over and over again. It's just clear to me that you can have a space where numerically the majority of the content, or the majority of the operators on it are ill operators. The majority of the content is bullshit or horrible or violent or explicit. You can have a space where the majority of the content is useless, or it's factually untrue, or it's damaging. But the majority of views is very much correlated to the smaller sliver of that space that is useful, that is helpful, that is engaging, that's inspiring, that is that symbolizes freedom and freedom of information. I believe that's what we have. So the majority, it's like the 80-20 rule, right? The 80% of the views on the web probably go to 20% of the spaces, and those spaces are usually not the illegal spaces. This should not be confusing. Crypto is the exact same way, probably. the Pareto principle, 80% of the usage of crypto and the money is inside 20% of the protocols. So yes, there's an infinite number of scams, but it's almost like irrelevant how many there are. They hurt people and they're big, but the majority of the content on the web, as well as the content or the coins on crypto, are not these cases. The majority of the use and the eyeballs on them, the majority in terms of absolute numbers, is all scams and is all vacuous coins, right? But there's a distinction there that definitely has to be made.
Not even the scams are new. You know, a lot of the stuff in the scams in DeFi, a lot and so on, these were mapped out by
correct.
the early guys in 2011.
Yeah.
And
wow, okay.
like there's not even the scams are new. You know, basically wherever there is the concept of money and there is the concept of other people's money, there is the concept of I'd like their money to be my money. And
scammers
so
everywhere.
Fraud has existed as long as money has existed.
Right, that's a good point.
I think.
Yeah.
So this is what I mean. It can only do that if it's operating more or less below regulators' radar, because none of these instruments are new, right? The ICO explosion in 2017, 2018.
Right.
That
Huge
was just
scam. Yeah.
It was basically a way of issuing
securities.
unregistered penny stocks.
Yeah. 100%.
You know, and even if they had sincere intent, they were issuing unregulated penny stocks, and a lot of people got busted for that. And a lot of them didn't have sincere intent, you know. Or DeFi. A lot of this is complicated derivatives trading. And you can say, oh, it's terribly complicated. You wouldn't understand it. You need to understand technology. So the CFTC looked at that and went, yeah, you're violating rules. You're manipulating markets in grossly illegal ways, and we're going to bust you. And so A.V. Eisenberg is currently awaiting his trial, that sort of thing.
I think the SEC has failed a lot of its lawsuits so far. So it's kind of interesting. I mean, this is only 9 months in the past, so it hasn't been that long. I mean, I think the SEC has failed suing Ripple. They've attempted to sue Coinbase, or they sent out Wells notices to a bunch of these other companies. I think that they were really trying to sue Uniswap. That was one of the Wells notices that came out earlier. But from my knowledge, it hasn't really gone anywhere. And for the most part, when they get into court and discuss these things, the SEC seems to continue to lose the cases it's bringing against the various crypto projects, specifically the main leading ones.
A lot of this is really well understood instruments, but they're often sold with that libertarian sort of pitch, which is, as I said, it's often very sincere. And that's
nice,
fine.
yeah.
But often sometimes it doesn't really matter if it's sincere or not, because you can just look at the way it works, the shape of it, and you can see that the money is flowing in a particular direction and it's not doing what it said. And using other people's money for purposes that are not what you said is normally considered fraud. That sort of thing.
It is fraud. It is.
So I would not even look at blockchain as technology. Technology is the pitch. That's how it's marketed. It's marketed as this technological innovation that nobody can understand because it's just too.
Let's just be clear here. I don't think that he's necessarily correct about this. I think part of the problem is people don't understand it because you're fusing technology and monetary kind of like abstract ideas together to try to understand the value of this thing and why it's even useful. People do not understand generally how the economy works at all. Like nation state debt, what is that? What are bonds? What is even the stock market, the S&P 500? People do not have these concepts. Inflation, I don't know. Like I know I experienced it, but we don't collectively, myself included, we don't have perfect knowledge of this space, and many of us have very, very little knowledge of that space. So crypto very much, and specifically Bitcoin, it seems like a solution that's looking for a problem until you understand these spaces more correctly. And so I think the innovation with Bitcoin partly is using technology for the first time, a bundling of all these different technologies together that were proven out in the 60s, 70s, and 80s, basically, putting them all together to create now this first like non-government backed currency, this unit of exchange that people can transact on and settle immediately. And it's held over $1 trillion of value on it with open source code running. It's a community effort, and it continues to do that till this day, and it's run 15 years without being hacked. That, if you're going to tell me that's not new technology, okay, but it's the semantics now. It's not new technology because it's all built off of these old ideas, but it's a new entity. It is a new existing thing now that we didn't have before. I didn't have access if I was in Zimbabwe or Ethiopia to transact instantaneously and to get my money out of my local dollars and to put it somewhere else that might actually even grow. Or I could exchange it for USDT and actually get US dollars that have more protection against inflation and kind of ransacking from my nation state. That's a new technology. That's a new entity. That's a new option that people didn't have. It's optionality. So again, he's being insincere with some of his critiques here. He knows what he's talking about, but he's failing to really push the point to have a balanced conversation.
Complicated. So just give me your money. Whereas actually, you can sell a lot of things that way.
Yeah,
The .com boom was a lot of it was sold that way. We don't know how we'll make money, but we'll magic it.
So we're in the conversation again of like mania. Whenever people are in a mania, whenever there's a bubble, it's going to burst. It almost never sustains, and people act irrationally. And he should totally critique it. But this has no relationship to the kind of fundamental value proposition that is, let's say, Bitcoin or other cryptocurrencies or smart contracts. So
now you got some real businesses out of that.
We're getting lost in the weeds.
I have yet to see anything coming out of the sort of crypto sphere, because as I said, 99+% of people are in it to make dollars.
Agreed.
Yeah. The way that crypto has actually worked is,
again, if it didn't make dollars, specifically if Bitcoin wasn't rising, because again, it's half the market cap of the whole thing, and when there's when Bitcoin sneezes, everyone else catches a cold type thing. We have to still so people, 99% of people are in there to make money, but why are they even able to try to make money with this? It's all bullshit and it's all going to zero. It's collapsed 3 times before. Like, you have to explain that as well, right? Like, why is it holding now $2.2 trillion market cap US dollars worth of value in the system if it's all people trying to scam each other, and it's just going to collapse in a moment's notice to zero, which it hasn't.
Money flows from retail investor suckers to a small number of rich guys.
That's true.
That's the actual flow of cash.
Every economic system, as far as I understand, does that, but sure.
And they're sold a lot. I think the story there is a story of fraud. Right. I get very annoyed and intense about this, as you can imagine.
Rightly
that's
so.
The moral core of everything I do is about that. Yeah. But along the way, we can talk about it with people who have enough money that their money is their own problem. And if they want to spend it on magic beans, sure. We can discuss the details of it, because the details are actually fascinating. I wouldn't cover this stuff if it wasn't fun.
Right.
Yeah, there's just so much in the crypto space. I mean, starting with Satoshi Nakamoto, whoever he was, and Hal Finney and Adam Back and whoever else was involved in the early days of Bitcoin.
Really, they're a good example of the early, very sincere libertarian guys. And they're still around,
Yeah. Yeah, are there, I guess, looking forward with blockchain, are there any real use cases you see for blockchain, whether it be legal, legal industry,
pretty much no.
Something other than finance? Is there any real use case for blockchain technology?
So when I say no, that's a very long-term, well-researched no. As in, I've spent 7 coming up 8 years looking at this stuff and not seeing anything that was actually a use case. As a technology, blockchain is a very slow back-end data store. It is worse than any other alternative. This is where actually being a sysadmin by day is useful, because you look at technology.
I want to agree with him right now on this. I mean, I'll just bite the bullet. Most of the digital things that people are doing, where they're transacting information, where they're trying to prove ownership, should be done in a centralized way. We should be using high scale servers, cloud computing farms from AWS, from Microsoft Azure, from Google Cloud. We should be partitioning those things at a very cheap rate, or spinning up a server ourselves if we have to, and maintaining those values there in a centralized place. There's no problem. There's no problem. It's just an in-game item. Like, who gives a shit? Like, we're not talking about trillions of dollars of value. But when it comes to trillions of dollars to value, and when it comes to my economic outcomes and my government's ability to modify policy to, let's say, drive up assets, so all the winners in the society start winning harder and all the losers start losing, it might be worthwhile to take a step back on the technology front and to actually bite the bullet and go slower and go more open and go in a place that isn't controlled by these actors. I might value that. I might value that very strongly.
Technology, you think, yes, but what's it useful for? And yes, how would it measure up against other alternatives? What we see with blockchain as a back-end system thing is that every bank and payment processor and so on has experimented with blockchain repeatedly over the years.
And as it's getting better, Solana is a promising one. They're finding out that if they can have higher throughput at cheaper prices, basically, and allow merchants to have choices, it'll actually be better. I mean, forget about the payment networks. They charge American consumers, American businesses, approximately $260 billion a year. This is from a recent report, like consumer report in from America, which equates to about $1,000 a year per American person on kind of like average, roughly, something like that. And it's like, do we want our businesses to have the option to use different payment networks and gateways that they can trust, that they feel like are secure because they're blockchain enabled, and they can do it at a fraction of a price, at a fraction of a penny, they can do these transactions.
A lot of that is because you'll tend to have someone get into a bank research unit, and banks have research units. These are guys who write science fiction all day about money. And that's good, because you need that, because banks need to know what's coming, because a lot of their job is stability. So they need to research what would happen if everything turned upside down and was painted blue. What would we do then? What would happen? So, but sometimes the researchers just get a bit carried away, and a bank ends up doing a blockchain pilot, and it sort of doesn't do much better than anything else and doesn't go anywhere. There is a lot of talk, and I've got a half-finished piece which I have to get done on this. There's a lot of companies who have seriously talked up blockchain and got in the financial press and so on, saying, yes, we are totally doing real-life trading on a blockchain. Yes, the blockchain does stuff. No, we've actually got real money going through this totally. Then you find out it's a pilot program. Or better yet, there's one example. I won't name the company. They put out this stuff, got the press coverage for their blockchain solution. The software turned out not to have a blockchain in it at all.
Right.
And I
It'll be
found
more
this out
efficient,
from someone who was working on it.
as they say, it'll be more efficient.
And it had a blockchain bit. Then they sort of sidelined the blockchain bit. Then they put in a conventional database.
Yep.
And then they took out the blockchain bit because it didn't do anything. So it's now just a conventional .NET application with a Microsoft SQL backend, like
Yep.
any other sort of
Very efficient
software.
Yep.
And then they did a blog post where they talked about how they were not taking a pure blockchain approach, because that doesn't work. They were taking a...
Again, I have to say to him, like, his critique is correct. Bitcoin and the value it overall is not a value of technology. The technology is a base layer that enables something else, and that something else can be useful or useless depending on your use case. For most companies and most products, they do not need to be on the blockchain. Now, it's value added in some ways to your end user. If I'm playing a video game and I can actually own on the blockchain on my own account without permission different things that I'm earning in the video game, then I can go to a market and actually sell it for any sort of currencies, and I can resolve it to fiat if I need to pay bills with it. I don't think playing video games is a good way to kind of like make money, other than being a professional streamer or whatnot, a professional esports enthusiast. But I just agree with him fundamentally that most solutions don't require blockchain. However, I disagree. Blockchain does provide value added specifically in certain areas. Specifically, if you're the type of company that needs to do a lot of auditing and has to have a perfect auditing trail of all the transactions that's happened, or you want to set up smart contracts now to automate certain things to happen based on, and to resolve transactions based off of wallets, and that makes a more efficient application and process for you, as well as a more open one, and you want that openness and you want that auditability. It's good. Then it's good. But for the 99, I think it's, again, the 80-20 rule, probably at least 80% of applications will have no need for blockchain whatsoever. And so I just agree with them. There's a bunch of people trying to shove blockchain, just like they're trying to shove AI right now into their products that don't actually really fucking need it. And they're just trying to do it because it's hot and you're going to get funding from that. But the fact that people are incentivized to be bad market actors within a space to throw around jargon does not mean that fundamentally the whole space is worthless, which is kind of what he's saying.
hybrid blockchain approach. which is, I presume, a hybrid between the marketing says blockchain and the actual software doesn't have a blockchain anywhere near it. Of course, the press stories were never corrected,
right.
because why would you? So I think it's profoundly important to, if you possibly can, get actual technical details on how the heck this works and whether the blockchain bit does anything beyond maybe logging. There's a lot of people trying very hard to make blockchain work, and it doesn't. It's like just not better. You know, I'm still open to seeing
I agree.
something that does better technically than just
It's
using a conventional database.
I mean, this is so he said the quiet part out loud in a way. Like, he's correct. A database will overall be a much better. Will it be more redundant and more reliable? Will it be more secure from hacking? I mean, these are different questions. I think not. If you look at the Bitcoin network, $1 trillion, been up for 15 years, hasn't been hacked. There's a 51% attack. There's different technological things that could happen to blockchain. But so far, we've battle tested it pretty severely right now, and it's survived so far. So blockchain seems promising in that way. If your application is focused on ownership of data, getting royalties from sharing different access to different files, proving ownership of an art piece or a piece in the real world, supply chains, proving where things come from, and worried about the middlemen actors lying about where they're sourcing things, and then putting a sticker on it that simply says, well, it came from here. Having it secured on the blockchain in that way. These are all use cases of voting. Voting is another one where the different parties in the political system don't trust each other and don't trust the end people who are counting the votes or the software that's counting the votes. But if it could be done in an open software on a blockchain, there could be more trust in that. So again, his point is well taken, but I feel like he's pointing out the obvious, which is again, most people are lying about it. We should put blockchain in everything. We should put AI in everything. We've developed our own AI. Really, it's just an API that reaches out to ChatGPT. There's a whole bunch of lying and there's a whole bunch of scams in these kind of marketing blitzes for different technologies. And oftentimes, what works best is the battle-tested older technologies. Fucking write it in an assembly. It'll be as efficient as hell. Don't even use abstractions, right? Like abstract higher level programming languages that open up to a bunch of errors or type errors or these different type of problems. But then we have to ask ourselves, is it always the case that it's better to write in assembly or not? Or maybe Bitcoin's the assembly in this analogy, where it's like sometimes it's worth getting down to that level and losing some efficiency in terms of speed to gain these other things that you get from, let's say, writing in assembly, like total efficiency when it comes to garbage collecting. All right. Maybe it's worth actually allowing people to create these obscure wallets with these secret keys they have to maintain, all this, because it's the amount of autonomous ownership we get, proof of history that we get, and maybe anonymity that we get is actually worth it. So again, it's like I'm agreeing with his points, but I don't see, he's not being sincere about the overall claims about use case. The majority of people who are saying the majority of people who are claiming that crypto is useful are totally bunk and full of shit, and this is common in many other sectors, and I agree with what he's saying.
But fundamentally, if you have a trusted entity in the system, if you have anyone who is responsible, just use the database.
Yeah.
Blockchain is supposed to solve the problem of not having any trusted entities, so that you can have a system with no trusted entities. So firstly, that's basically always incorrect. Bitcoin centralized completely by about 2014. There's about 3 large Bitcoin mining companies who fundamentally control what goes on the chain or not.
Well, by 2014, you can look at the charts. He's not quite right, but currently now, there's the top 2 miners are like an American miner and a Chinese mining organization. They own almost 50% of the hash rate, so it's getting quite precarious in that regard.
And it's got like 3 or 4 core developers, and
right.
They have to listen to their user base,
right?
But it's incorrect to say that no one runs this thing. The Ethereum Foundation, they changed from a proof of work system to validators, which basically sets up something that looks very like an investment scheme. You put money into a validator and you stake your money in a validator and you get back a return on it. That's very investment scheme shaped. I'm not an SEC lawyer or anything, but
yeah,
I mean,
the SEC has ruled Ethereum as being a
so
commodity as
I'm
well,
not any sort of lawyer.
It doesn't have to be a lawyer.
With talking about blockchain and the law and crypto and the law,
Sure.
The US laws are the ones that apply because everyone wants US dollars.
That's
Worldwide,
fair.
US is the only regulator that really matters.
Fair. I agree with this point as well.
That's where the action is. It's all in dollars. So, for instance, the definition of security is incredibly broad in the US, unusually broad. But the Howey test is very simple, very broad, and basically all of this stuff is securities, like really obviously.
Again, like the SEC has ruled. I think it ruled well before he made this interview. I don't know, but maybe sorry, maybe it's just been a bit after because of the ETF stuff. And he can claim, well, the ETF rulings were bullshit because there was Binance and billions of dollars were involved, and you've got entities like BlackRock and different asset managers from the traditional financial world, which is now different from crypto, causing corruption in crypto, and they're the ones who put on pressure from the SEC and different regulating bodies to state that ETH and Bitcoin are commodities. That's all fine. He can say all that and he can be true, but then it kind of negates. He's saying that all that matters is what the U.S. ruling is. Well, we've got the fucking U.S. ruling, whether it was false or not. Like you have to agree at this point. Okay, I gotta let off on that point. But I think even someone like him won't. They'll be like, but it wasn't done correctly. And then it's like you're moving the goalposts. It's like, what do you want from me? I mean, the rulings come in. It's a commodity. Oh, well, that's not right. It'll be overruled eventually because it was done in a corrupt way. It's like, well, fuck. I mean, okay, at this point, then there's no winning. Even when you get the ruling that you said was the one that matters the most, it's not a commodity. So let's just give up. I mean, that's basically, I can hear it coming from him right now, even though he's not saying it.
In, say, the UK and the EU, there's actually a list of what is a specified investment, specified as being a security type investment. It's a much shorter list. So, for instance, there's been guidance from the FCA in the UK that some of this stuff would be securities in the US, but is not securities in the UK, that sort of thing. But that doesn't matter because every market's irrelevant except for the US.
Yeah.
There's a lot of action and trading in Southeast Asia, for example, but somehow everyone still thinks in USD.
So it's still based in USD. There's really no long-term use case for cryptos.
Let's jump over here. I'm going to jump this because I don't know about the real value of market. I mean, I don't know what he's going to do. Zero. We'll see. But let's jump over to Tether, which is a big problem.
In the past have been driven by shenanigans, market manipulation. You talked about Tether, and that's a big elephant in the living room of how Tether influences crypto.
Yes.
By basically
it's not just the money, it's the influence.
Creating dollars out of thin air.
I can't, in this regard, do not nation states do this, and basically they cause economic tightening, economic easing, and just kind of like, not arbitrarily, but they get to decide when markets are going to pump and when they're going to crash. China's doing this right now. Again, they don't have the view of that, but China's done the biggest announcements of economic stimulus, and I think actual stimulus have started now in China, and their stock market jumped like 16% in one day. It was the largest they've ever seen since the 2008 financial crisis. So I don't know where we're going with this, but this whole idea that someone's creating a currency that they then have control over, and they're wielding that currency to do untoward things is okay. I think that's the US dollar, but okay.
And buying shares of companies. Tether buys its way into a lot of other companies as well, or it gives them a loan to sort of partially own them or whatever. Because you got all this money and pseudo money flying around, and of course they all count cryptos as money, and you can pay your share in cryptos or something. So it's extremely influential. You can model the crypto market as a single unified casino run by a small number of people. Basically, the whales, the exchanges, the miners are all the same people. This is what, more broadly, people have forgotten what unregulated markets actually look like. We're very used to the last century where we've had the SEC has a really regulated regime of how to do a stock offering, how to do an equity offering to the public. And that's worked really well. We had decades of prosperity follow. And
it worked well for everyone.
But, it's like, it's not the wilderness. It's not sort of dog eat dog jungle. It's a garden. It's well tended, and people think, and people talk about it. They're like fish who don't understand.
I think he's missing the point here, though. I mean, is he missing the point of crypto? It's well regulated. It's a tended garden, but it doesn't work for the average person, and it intentionally does it that way. It intentionally is paid for, bought for, is regulated by these bureaucracies and these political apparatuses that are influenced so much. You look at Citizens United in the United States, that ruling that allowed super PACs to be built. We see it in real time, basically, like these unstoppable forces. And the end result is there's prosperity going on, and GDP is growing up, and productivity is going up. But the average person, as these companies in these countries are seeing their quality of living decrease, their healthcare and insurance decrease, their ability to a home relative to other people decrease. They're not able to afford to live in their community anymore. That's the point of crypto, though, is to remove that power. So it's kind of frustrating to hear him talk in this way.
That water exists. And so they think, oh, non-regulation. Just think of all the things I could do. But, at that point, you are in the jungle. It is the Wild West. There is no regulation.
And it seems like you can't really have it both ways, where it's like this is a coordinated place. I guess he's saying it's coordinated and centralized, but it's also not regulated. But I guess what I'm saying is, like, if it feels like it was truly unregulated and random, it would be much more decentralized, which is, I think, the goal of crypto, and it's kind of failing that goal right now. But anyways, I have more to say. But
And there are a lot of predators out there, and they're looking for you. You're tasty. So people talk about the price of Bitcoin. The financial press will say Bitcoin up to 42,000, and they don't interrogate that. I'm baffled they don't interrogate that. I mean, any given financial paper, finance journalism is one of the areas of journalism that's really well funded. So they're fully equipped to do a good job. But they tend to have large staffs, and some of them understand that this is shenanigans all the way down, and some of them sort of don't. So
Yeah.
a paper like, to name the newspaper I read every day, the Financial Times, they'll have some incredibly shallow and gullible looking piece on Bitcoin went up, it must be market signals. And you look at the price graph and it goes tick 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 doing, and you go, that's not organic. And just interrogate the slightest bit, and then there's other guys who like Zeke Fox at Bloomberg, who looked into Tether, said, this is quilted of red flags, and wrote a whole book on the theme. Number Go Up, which is one of the best books of the recent crypto crop 2023.
Check out Number Go Up. That'd be fun.
It's a really good book. Everyone should get it.
What's it called again?
Yeah.
Number Go Up.
Okay. Number
Zeke
Go
Fox.
Up.
If he has a moment, he's definitely someone you should talk to, by the way.
Okay, definitely.
He's a finance reporter. He looked at crypto and went, this is obvious trash. But then he looked into it deeper and went, this is obvious and reprehensible trash. He was not impressed by crypto at all. The things that crypto and Bitcoin promise, they're not wrong things to want. That's very important. There's a pitch there, And as I said, it started in sincere, if extreme, libertarianism. These weren't con men. Some of it attracted a lot of con men, many of whom said the libertarian things and were actually just crooks. But that happens. Do we want electronic money? Well, yes. I think a big part of the pitch is that US consumer banking is sort of very bad and clunky on the consumer end.
Yeah.
It's like, I'm in the UK, and in the UK, Europe, Southeast Asia, money just whizzes around really efficiently in electronic form. I've got electronic money. It's a card in my wallet that is hooked to my bank account, and I just go to the shops with that. I have some cash in my wallet. I took it out a few months ago in case I ever need it. I haven't used it for a while. But like, I think I last wrote a check in the last 10 years, but I don't remember. It might have been the last 15. It's stuff like that. So people look at the US system and they go, we need a radical new invention, which is like Bitcoin, or maybe like Facebook saying, we need Libra, or something like that. And you need better back-end systems. And obviously, the US is huge. The history of finance is highly contingent, like how checks became the ruler of everything in the US, consumer banking, that sort of thing. And
to the Bitcoin ETF, I wonder,
as I speak,
is he going to make predictions that it's impossible and he's got a future, more bubbles to come? So we've got some predictions, which
I
I'm
think they're
interested in.
announcing it. This is January 4th. They're going to announce it today, apparently. So
Okay.
January 10th.
I'm sure this will be very amusing in the future. But it looks like they're only allowing cash create ETFs.
Right.
That is, new units are only created by buying them with dollars.
Yeah,
You can't deposit Bitcoins to get units.
Yeah.
Because a lot of funds were working that way, like Grayscale's GBTC fund. You could deposit Bitcoins and get GBTC shares, which you could then sell for dollars.
But again, I want to know why this is being allowed, and is it going to grow or not, and kind of have his input.
It was a way of dumping Bitcoins without affecting the price on the exchanges themselves. Now, that doesn't work so well because GBTC is now underwater. They're hoping to get back to par if they get approved as an ETF. But requiring cash create only means that dodgy Bitcoins can't be dumped into ETF shares and laundered. That's a very important consideration. And I think they're coming towards this because they are known to have spoken to a lot of ETF applicants and said, got to make this cash create. And a lot of them put in amendments saying, we're now cash create.
Yep.
So it won't be a place you can just dump in Bitcoins. You need to sell the Bitcoins for dollars, then put the dollars in to convert them to an ETF. And that's a bit inefficient. So
Right.
yeah, it should be interesting. I don't think a Bitcoin ETF, by the way, will cause number to go up radically.
Okay, so he made that prediction where we've got over the past few days. This is like October 21st, so like the 14th, 15th, 16th of October, we had hundreds of millions of dollars, $920 million, so almost $1 billion worth of value going to the ETFs. And we've had on their launch day, like right after launch for like the first month, it was like absolutely exploding. And the price has gone up and it stayed up. So, prediction failed. Now, again, he's going to claim, well, okay, I got it wrong, but it's going up for all these scam reasons. It's like, okay, but see, this is the issue I have. It's like, how can you be falsified? So he's made a proposition now, and that proposition is false. So now he's got to give an account for that. But his account is going to be, well, I got it wrong, but I got it wrong not because my thoughts are wrong. It's because the system is even more perverse than I thought it was. It's even more fucked up than I thought it was. And there's no winning, basically.
Yeah.
It might go up radically, but I'd look at how many tethers are being printed at the same time.
Yeah.
Yeah, that's kind of the real mechanism behind the Bitcoin price. Would you say that
Probably is.
I mean,
that's a major?
Let's look at the U.S. and the 2021 pandemic printed or gave to the central bank to hand out to the other banks just to help save them and prop them up because they had bad loans they'd have to liquidate in case there was a bank run on them. They couldn't pay back what they owned. They gave them 40. They inflated the whole circulating supply of currency by 40%. So they just create more debt, more bonds that they're going to have to pay back, and they just start printing out. How is this not? I mean, it's horrible. It's horrible when Tether does it and pumps up the price of Bitcoin. It's terrible when the U.S. does it. I would say though that the Tether being printed is a result of more interest in Bitcoin. I think that the supply of Tether goes down and there doesn't print as much when the supply is lower, and the supply of Bitcoin is actually the price action of Bitcoin seems to be related somewhat to liquidity in the system. So it's liquidity coming from the traditional financial side that then is affecting Bitcoin. We see when there was a clampdown, when the interest rates went up, risk on assets dropped, Bitcoin's and risk on asset, it dropped.
That would be the major price manipulation behind Bitcoin is Tether, just that one stable coin.
Quite a lot of it, yeah.
Okay.
They've tried to put other stable coins into the same job, like TUSD, which then suffered their custodian. Oh, this is hilarious. TUSD was True USD. It was an old stable coin. They recently ran into a lot of trouble recently because their custodian, Prime Trust, suddenly went broke. No one knew what had happened. Then it turned out the Prime Trust, which is a Nevada trust company, a fiduciary, a guardian of assets of any sort.
And let me just, so again, he's probably has good stuff to mention over there. I just want to jump around a bit. Riot regulators sat back. I think that'd be an interesting one, but I'm gonna go, and then El Salvador as well. Is it their mishap? Is the mishap that they bought a whole bunch of money and bought a whole bunch of money going in that it's gone down? Because right now they're in the green, I'm pretty sure, and if the bull run continues, they're going to be really well up. But I'm interested. But let's go crypto in the coming years. So let's hear.
App on Tether, and then we actually find out how much, fake money is in the system, or what do you see occurring in crypto?
So there's been interesting stuff with Tether lately where they suddenly onboarded the US Secret Service and FinCEN and OFAC, and they're freezing a lot of questionable Tether wallets and so on. I don't think Tether would ever do any of that voluntarily. They did it because they would have been told, do this or we bring a great big hammer down on you.
So they're being regulated then. It's not just like the Wild West where anyone can do anything.
Because I don't know, the US will often let financial shenanigans pass by, especially when it's a non-US entity. Tether's not US linked at all. They basically got out of the US. But the reach of OFAC is long, because if you violate sanctions anywhere in the world and you've sniffed anything that looks like a dollar, they'll bust you. And they'll get the local cops to come and bust you. And they're extremely serious about sanctions,
Yeah.
Because particularly like one of the big reasons that Binance got busted was not so much financial shenanigans, it's because so much money was being laundered for sanctioned entities like terrorists and North Korea, and they weren't going to tolerate that. They busted them.
It doesn't happen with the US dollar. It's only really
these are laws. It's very stupid to break, so you probably shouldn't break them. But they went, oh, we don't care. We're on the
TD Bank Toronto Dominion Bank just came out and has accepted a guilty plea for the largest conspiracy to commit money laundering in U.S. history, in U.S. banking history. I'm not saying money laundering is good. This is not a whataboutism. What I really am saying though is what is the claim that this only happens in crypto? I mean, crypto enables it more. I mean, these things are horrible. Again, I want to say, but the financial institution the financial system that we currently have also enables this shit. The most money laundering, the most drug sales are being done still in US dollars.
US. It doesn't matter. Oh,
yeah.
So I'd expect ransomware is a huge problem. Ransomware existed for decades, but it only got big with crypto because suddenly you could get someone to pay your ransom without ever touching a bank account.
This is the bad
and that's
crypto.
When ransomware really got big, was with crypto. So that's a problem for crypto.
Yeah, and again, so I it's not that I'm trying to equivocate. I think these things are bad, so we should talk about them as being bad. And crypto enabling ransomware is bad. Also, people weren't able to kind of create their own newspaper and create their own misinformation. First of all, without the printing press, right? And then later on, without the internet, it was gatewalled, was wall kept, and in a way it was good, but in a way it was bad. In a way it was bad is that there was a lot of literal conspiracies or connections between corporations and the state where they pushed media. I mean, like you look at seed oil and how it's healthy and how saturated fats are the problem, and get rid of butter and reduce it and do canola oil. And by the way, you're getting fat off of fats. You're not getting fat off of sugar. That's the capturing the ensnaring of the academic institution by corporate interests, by big sugar, basically, by these new hydrogenated seed oils that then it proliferates into the society and does immense damage. And part of the problem is that it's a walled garden that can be centralized and can be attacked, can be overrun, and the competing views and opinions can be squelched. There's no way to advertise them well. And now that we have the internet, we have a lot more people doing critical review, just like this YouTube video is doing. You have people who can freely create this content to be critical about it. And I think overall, in that sense, we're in a healthier space. Although, of course, people can now have misinformation. You have massive podcasts that talk about disgusting things, and It can have Alex Jones has his own site. Like, this is horrible, but at the same time, we're using it right now. Hopefully, all three of us in good faith for good.
And as long as crypto can be used for that, that's going to be a serious problem for crypto, because you need the ransomware to get big enough to cause serious problems.
It's a serious problem for the internet, but we still have the internet because it provides utility, and I think that crypto will and is already providing utility and will. And again, that utility is basically protection against the U.S. dollar and descaling the fangs of the nation state to control your economic future. I think that's actually a massive thing we've never seen before.
Problems for the US government. The Colonial Pipeline ransomware got close to that, and that's when they really started paying attention. Going forward, I think one important question for Bitcoin is, will there be another bubble? Will there be another retail bubble? Will there be fresh retail dollars? I would say I don't think so. But
interesting. I mean, he's going to hedge his bets because he knows. But I mean, there's already been three. Oh, why wouldn't there be a fourth? Because the reasoning why he's going to give now is because it's all crashed. People are wisened up, but people have been wisening up, and it's been crashing, and it's been a fraud, and people have lost a bunch of money. The other crashes. So we have already established multiple times, objectively, empirically, that the reasons he's likely to give are not sufficient to stop the next bubble.
But I don't want to bet against human stupidity.
There it is. It's the reason why this is happening is because people are dumb enough. Okay.
Because, as I said, suckers are eternal. There are people who just want to be sucked into a scheme because they think they'll get rich for free. And you never get rich for free. But so I said in 2017, 2018, there'll be another bubble around 2021. And there was.
Okay.
And that wasn't a feat.
But he's not going to make
the prognostication. That's just the idea that after a while things calm down, the old suckers forget and there's a fresh crop.
I think I think that the better explanation is that the global liquidity cycle turns on again, and people are pumping up assets kind of indefinitely, because that's the only way governments can handle basically their monetary policy, supporting their programs, their welfare programs, so their pension programs. The baby boomer generation is very big right now. They're using healthcare massively. The only way that they can have social welfare, they can have their social programs, which are good. These are good things. Education. The only way they can support this is by printing more and more debt, burdening the future generations with that. And there's no way out. There's no way out for them. The productivity. The only way that they have an out. They've got two avenues, really, two solid avenues. One is productivity rises. Let's say AI, like they're able to produce a lot more. They can produce their way out of it. The second is they can just print money. It's not an actual solution, but it's a band-aid, and that we're seeing that band-aid. If you look at the US's debt inflation, if you look at the amount of money in the supply, it is massive. They've lost control of it. You want to know why housing is going up? It's not because the houses are becoming double. I mean, like this, this is stupid in a way. Why is a house worth double as what it was like from 10 years ago or 15 years ago? It's not because the bolts and wood, it was upgraded. It's not about that at all. It's the real fact of the matter is that there's more money being pumped into the system, and the asset races are rising. You can see this with real estate without a doubt. That most of these houses are getting older. Their houses are a liability. They're not an investment. They're getting older. They actually should be worth less in a way. They're worth more. They're worth much more than 20 years ago. Why the fuck is that happening? This has nothing to do with human stupidity. It's not like there's a bunch of stupid people walking around who are like, oh, a decrepit house, I'll pay double the price that it was, 10 years ago. That sounds like a good idea to me. It's because they have no fucking option. They have no fucking option but to buy a house like that. This is the cheapest house that they could afford. Even then, they got to go into debt because it's 10x, 20x their income. It has nothing to do with them being stupid. Now, you can claim there's a lot of activity in crypto that is about ignoramuses, about morons, it's about trying to get rich quick. Although I'll have something to say on that. It's very hard to make money in any market. Any markets are always working against you, including the crypto market. This idea that some people do get lucky and actually, but to make money on paper and then sell out of your position and not be a greedy fuck is very hard. It's very hard. But let's put that aside. Let's say, crypto has the allure of quick money. I'm just saying people have been bitten. The fact that people lose 80% of the value and they crash, it goes to show you that the majority of people have learned that it's very, very hard. But his other point that it's just a bunch of stupid people. I mean, look at the housing sector. It's just a bunch of fucking morons who are buying houses that should be devalued. They should be going down in price. They're going up. Why? This explanation is very upsetting. It's very upsetting because it's not about crypto being useful or not. The way that we're framing this conversation is about why are other things, why is the S&P have gone up, 50, 100% over a decade too, because the companies have gotten much more productive in that way? I don't think so. Why did the S&P 500 rise up massively during the pandemic when there was massive economic policy to stimulate it, and why did it go down when the interest rates went up? That has nothing to do with the company's productivity. It has everything to do with the government regulation and the economic decisions that are being made, the economic policy.
Now, crypto's bad name has kept following it, certainly up to the end of the Sam Bankman-Fried trial. So that was really giving crypto a bad reputation actively in the news all through 2023.
Yeah.
Which is good. It deserves one. I'm not a fan. But so could it recover by the end of 2024? Maybe 2025, if the regulators don't seriously
Got to learn your market cycles, son. Got to learn your crypto cycles. I mean, maybe it's going to recover in 2025. That would not correlate. Again, past performance in history can't predict the future, but if you were going to make a prediction about the future, you would likely look at the past and try to get an estimate, in which case he's throwing out numbers that show that he hasn't really looked at the market cycle. He hasn't actually accounted for when these things would happen.
Before then. Now, the way to constrict crypto is simply make them obey the regulations that apply to those financial instruments.
Which would be great.
This works really well.
Yeah.
You don't see plain old ICO schemes anymore because at that point you might as well do a stock offering,
So we can actually, I mean, this is him admitting that we can actually clean up the crypto sphere to some extent. He's kind of making it both sound like it can be cleaned up and it can be stopped, but also at the same time, it's the Wild West and you're going to lose your shit if you go there.
Or a Regulation A offering, maybe, if you're small. Reg A have the problem with the shares. There's no market for the shares, really. I mean, basically, it's a sort of crowdfunding for people you like. But that sort of thing is probably a less worse idea than ICOs, and also there's rules for it already. So I don't know what will happen with crypto, but I think the regulation will continue. The regulation will only get stronger, and the regulation will take the form of you have to act like financial instruments you are. Right. So they'll sue Coinbase and Kraken for doing multiple securities functions in one entity, stuff like that. Getting into sort of, you have to have read up what the laws are before you understand what the action even is. But that's sort of where the plumbing in finance, that's how it's regulated. So I expect that the mass market for interest in crypto is going, but there should be a lot of finance nerds like us going, wow, that's fascinating. The people who read Matt Levine every day will still be following it.
Exactly. And I guess I wonder, like you, is there another maybe final, dare I say, final bubble in crypto, like in a year and a half? Have people actually forgotten enough about Sam Bankman-Fried, FTX, everything that happened there? Is there a fresh wave?
I mean, it's so interesting what they're saying, because they're kind of saying, like, given all the bad media, which I don't know, we could put a dollar figure on it, it would be like hundreds of billions of dollars of sustained bad media, not just probably just about the last bull run. Like if you were to price up the bad media, given all the bad media, and then you talk about the past 10 years, given all the horrendous media, are there still idiots and suckers going in who are not only going to pump this thing, but going to pump it to new highs? And the answer is likely going to be yes, because that's the only way it pumps. But at some point you've got to think, like, one of the things you're suggesting is we could spend an infinite amount of money showing people real examples about how the space is a scam, and it still wouldn't work. Why? Because there's something in there. There's some value proposition. Even if the proposition is bullshit, it's just hope. It's just hope that you can make money and get rich. So that's valuable to people in a way, in a sense. A movie is a fictional apparatus, but it's still valuable. People enjoy it. But no, there's nothing to explain it other than people are stupid and greedy. They're going to pump this thing up to new highs even after a marketing blitz of horrible shit, even after experiencing the scam themselves. Or is there another explanation? Is there another explanation fundamentally as to why all assets are why this Bitcoin commodity / asset is rising, why ETH is rising, why altcoins are? Is there an explanation for that can also explain why our other traditional things are also rising at paces we don't understand?
of
But
maybe
there's some people that
stimulus
just
that the
fucking stupid.
government hands out in response to a recession or something like that that prompts people to gamble with
S-
this liquidity.
So people feel really precarious. There's a lot of people in the Democratic Party upset right now because Joe Biden's doing some actually very cool things, like infrastructure bill, unemployment's down. The numbers are objectively good, but people still worry and think the economy is bad because they don't feel secure. They feel precarious. Um, so when people feel precarious, they're susceptible to get rich quick schemes. So it's possible,
That's true.
unless people feel more secure in the
Well, I don't
economy.
know. I don't know why he's saying precarious. Well, that word's fair, but I would say desperate. You've got people who are desperate now, desperate because the cost of things are so high and so beyond them, and they don't understand any mechanisms through which they can generate wealth in a sustained and viable way that will lead into their retirement. They're not seeing it, and it's from down high. There's nothing being offered. If anything, they're taking away. They're taking away your benefits. They're taking away your retirement. They're taking away full-time careers that last, decades and decades and decades where you can work up in a company. You've got a job switch all the time. They're taking away the ability for someone who has a high school education or even at this point almost like a BA to have a standard respectable job. It's all being taken away from you. Now, it's not one individual actor, but it's the system as a whole that is essentially removing that. You outsource the jobs of manufacturing, which are decent paying jobs for people who don't have 4 or 6 years of higher education, and you outsource them somewhere else because the corporations can make money off of that. They can profit off of that. They can reduce their price points and manufacture more at a cheaper rate, even though you've got to ship it right back. There's a whole bunch of shipping costs, but it's just that damn cheap when you don't care about human rights and the environment, and you put it in some other country where they don't give a shit about that. It's unregulated. The corporations have joined the Wild West that he's worried about has already happened in a way. Corporations moved out of a place where it's regulated and went to the unsanctioned place. But as a result, they became very rich. The top 10%, the top 1%, the top 0.1% became very rich. But that wealth was not shared with everyone. Meanwhile, the people at these middle ranks and bottom, they've lost their wealth generation, wealth creation, and wealth storage ability. They've lost that at their expense while the rich has gotten richer. It's not a crime to be rich. It's not a crime to get richer. The problem is, like, what are the mechanisms that are being used? Are they fair?
Get rich schemes are there's fertile ground for them. So crypto is fundamentally a promise that you can get rich for free.
Again, it is. Many people say that. Many scammers say that. It's very fucking hard. So it's kind of like, yeah. And the only reason that you can get rich for free exists because people are actually some people are making sustained money with it.
On the retail level, it's a promise you can get rich without working for it. And
I
that
think you got
two
to
and
work for it.
two doesn't make four, two and two makes a million.
Right.
If you have enough imagination, which isn't true. I
Yeah.
won't.
Okay. Well, let's go to his book. I just want to kind of
So
finish this
much
off
to
here.
look into with crypto. David Gerard, I recommend both of your books, Attack of the 50-Foot
Yeah.
Blockchain and Libra Shrugged, as well as your website out there, Attack of the 50-Foot Blockchain. You regularly put articles up there. I'll put the link to your website in the description below. You're also on Twitter. David Gerard, thank you so much for coming on today.
Thank you so much for this.
Okay, I don't think that they're the contrarian, by the way. I think I talked about this before. The standard opinion is that it's all bullshit. That's the stand when I talk to the average person. When I talk to almost like 9 out of 10 people, maybe even 19 out of 20 people. They're all anti-crypto. So this is not a contrarian view at all. But anyways, David Gerard, great interview. I think he's really well informed. I would give him again. I think I would give him an A minus. I think I give him an A or an A minus. So definitely informed. Definitely understands the technology. Definitely understands the scam part and really focuses on that. But seems to be willfully kind of ignorant of any of the benefits of it, and specifically his critique is that the benefits of crypto on their own, just as a technological invention, don't pass muster. It's just use a centralized database, which I agree with him. If you're just looking at building like standard Web 2 apps, if you're looking at creating an Instagram or a Twitter or a video game, like for the most part, there's no reason to use blockchain. But he seems to understand the sincerity of the kind of libertarian theme of Bitcoin and crypto, which I think is actually a major theme still today. And it has an absolute relationship with the money printing and monetary policy and kind of infinite sovereign debt run-ups that we're seeing right now and the problems with that. But he doesn't make the connection. He doesn't make the connection between the cost of living and your economic opportunities as a middle class person, and also people who are even doing worse off in the developing countries. He doesn't make that connection between that and being able to kind of choose your own fate by putting your stored economic value outside of your currency, outside of places that are regulated by bought over politicians that companies write the policy for. He doesn't see that distinction. So in that way, there's no hope. But I think he's smart enough to see those things. He just doesn't value it. But I would appreciate him to more explicitly talk about these things and say, hey, some people, because he's looked into it, some people who are in crypto believe this, that, and the other thing, and I don't think it's appropriate. And I think you'd be better off doing real estate, or you'd be better off using these kind of instruments, these economic instruments, to hedge yourself, to protect yourself against this massive thing. And also, by the way, this massive problem with the financial system is happening, and it's increasing and getting worse. And there is a potential that Bitcoin and crypto could provide a solution for some people, and that it could outpace the other solutions, I would suggest. But I would still advise you to go with more standard solutions because the risk, because it's unregulated, because it's untested in the way that I would like it to be. This would be a much more honest conversation. So yeah, A-. Overall is very knowledgeable, David Gerard, and check out his books. And he also mentioned that other book, Number Go Up, which is definitely one that I'll check out as well. And I might read his Attack of the 50-Foot Blockchain as well. That's all for me. Thank you for watching, and take care. Bye.